Let's bring in Fast Money friend and Deepwater Asset Management Managing Director, Gene Munster, for more. Gene, great to have you with us.
Hello.
Was it worth 8%? I mean, there's a guy sitting in the front seat. It was a very limited amount of Austin, Texas, and the only people who got rides were stock devotees and social media influencers.
I think the answer, Melissa, is yes, it is. And stick with me here, is that if we look at just today's event, it doesn't add up to that 8% move. But we put in the context of what's happened over the past 5 years and 7 years. And as somebody who believes in everything they're building, this comment is going to seem harsh, but this company has largely overpromised and undelivered on these big milestones. And so when the fact that they got it off and, well, it was limited, I think is an encouragement that they are moving towards the right direction. And the other piece about that 8% move is this direction is not a small direction in terms of the impact that it could have to the model. I mean, it could fundamentally change the profit picture. I mean, the vast majority of this company's income could come from autonomous services, whether it's FSD or robotaxi or Optimus. And so in that context, and we're still at a $1.1 trillion market cap, it still feels like there's room to go if you believe in that vision. And so I see this as an appropriate move to the stock today.
Gene, at what point do you think that contribution actually starts to happen for this stock? Because if you look at the EV business, it couldn't be worse. It's literally at the worst spot that it's ever been if you go back a decade or so. So to believe that it's worth $1 trillion on its way to 2 or 3, you have to believe in sooner than later that there's going to be a material contribution. And I just can't imagine that the margins for the first couple of years are going to be any good. You have to assume they're going to be losing money on this sort of trade. So I'm just curious, thoughts there.
On the maybe start with the second piece of that, on the losing money, a different obviously setup versus what's going on with Waymo and that 100,000 plus per vehicle. This is an asset light approach. They're funding the initial vehicles probably for the next year, but most of this is going to be funded. So I think that this business could be profitable probably within a year or two, albeit the revenue is going to be pretty modest to, which gets to the first point of like, when does this actually, we've been waiting and this was a big step forward, but when is it actually going to be impacting the model? It probably isn't for 2030. And to put some context around like what potentially could be the impact by 2030, is that if they're on a path by 2030 to get to 70% share of the ride market, actually in 2030, if they hit like a 30 or 40% share of that market, it's going to basically double their operating income. So this is still way out there. And then how does that jive? If we're still talking 5 years out there, how does that jive with my feeling that this is a justified move? And I think the answer is that, yes, it's 5 years out there, but it's an undeniable truth is that this market is going to be fundamentally changed. And it's a big market, $90 billion a year in the U.S. alone. And it's really going to come down to Waymo and Tesla, and Uber and Lyft are largely going to be irrelevant in that future. And so I think that's the piece, that nugget, that carrot that's out there still is not going to go away, despite what I agree is going to be this is going to be an ugly year on their car business.